First up, though, a £42 billion merger, Anglo and Teck, a deal very much focused on copper. Looks like a pretty good one for Anglo, but there's quite a bit of backstory here, Alex. So why don't you fill us in on that for starters and give us an outline of the deal itself?
Love to, Dan. This is a bit of a surprise deal that's come about after a few months of negotiations that I've managed to keep secret. So this is Anglo American, London listed, probably the fourth largest miner listed in London on the diversified side, but lumped in with the majors: Rio Tinto, BHP, Glencore. Anglo has put in an all-share deal to buy out Teck Resources, which is a Canadian company, Teck, with a market cap of US $20 billion. It's a sizable operator. It also was seen as a target after Glencore came for it 2 years ago. And at that point, Teck was looking to split itself because it had a set of metallurgical coal mines in Canada and then has base metals as well. And the thinking is that investors rate base metal operations a lot more highly than coal mines. So they were planning a split. Glencore came and interrupted that, and then ended up buying those met coal mines as part of a company called Elk Valley Resources. So Glencore's hived off that part. What's left is copper and zinc holdings. Anglo is buying Teck for the copper. And this is a little bit in Canada, but mostly in South America. They own just under a quarter of a mine called Antamina, which has a few other major shareholders or major minor shareholders. But its main mine is called Quebrada Branca, which is just down the road from an Anglo 44% owned Anglo mine called Collahuasi. So that's really what they're looking for here. They're calling this a nil premium deal. So effectively, Teck shareholders will get just over a third of the company that will be called Anglo Teck. There's a the ratio they're paying is 1.33 new shares in Anglo American for every Teck share held. That does give a bit of a premium, but what Anglo's doing to keep things sweet with its own shareholders is paying a special dividend of just over $4 billion. And it calls this almost an indexation or a rebalancing of the balance sheet so that Anglo shareholders don't feel ripped off at handing a lot of their cash on to these newcomers. And that's similar to what it did with the divestment of Amplats or Altera Resources earlier this year, or Altera Platinum, excuse me, which seemed like a bit of an odd move, and at the time, moving $600 million out of this company that was about to go it alone. But Anglo is a specialist at moving things around. Also, I think the surprise element also became because Anglo's in the midst of its own restructuring. With the same idea really, focus more on copper, and move out things like the coal mines, De Beers, the diamond division, and also the platinum operations.
We'll come back to some of those divestments in a minute. But what about, we've spoken about copper. Is this purely a copper-based deal? We've spoken about the mines. The combination of those mines, but what, if you're an Anglo shareholder, can you expect to get from this deal? Is that it all said and done, what you're getting with Teck, or are there other things, other strengths, weaknesses to be aware of?
I think pretty much, yeah. You've got it there. What the major miners now are really focused on is building up their copper exposure, and partly you see this with Rio and BHP because they're so reliant on iron ore and therefore the Chinese steel market for their earnings, and they're trying to knock that down from 70% or so of annual cash profits to around about 50. Anglo doesn't have that issue, but has a more diversified portfolio, which has kind of limited the upside in recent years. And protected it from some of the more volatile periods. But they've built up a new copper mine recently. I think one thing to note is that the reason Anglo itself became a target for BHP last year and Glencore as well, although that didn't come to a bid, was they're having production issues at some of the South American copper mines. So that's kind of precipitated this move. So Anglo has plenty of exposure to copper in South America, but basically this is a situation where more is more. Teck does also have it's the world's biggest zinc miner. Zinc is a lower margin business because there's a lot more refining involved. That's mostly in Canada as well, which is a more expensive place to operate. So the Canadian aspect's interesting because most of the operations that they're buying this for are in South America, across Chile and Peru. But what they really have to do is impress the Canadian government that they're not changing. They're going to become a more Canadian company instead of completely just disappearing this Canadian mining champion. And there's legislation in place in Canada that means the government can block this if they feel like this Canadian champion is just going to be disappeared into a broader conglomerate.
So that does raise a few questions, again, for Anglo shareholders, which naturally is the prism we're looking at this through, given most listeners, if they have an interest, will be in Anglo. Firstly, then, let's talk about the Canadian side of things, because the company will be headquartered in Canada. It's keeping its London listing. Do we think then, inevitably, given the events of recent years, when you see a company moving its headquarters, you wonder about the London listing? But perhaps this is not quite a fig leaf, but it's not really a move to Canada. It's more of a way to assuage or regulators' concerns. So therefore, the London listing should be okay. Also, if you're an Anglo shareholder thinking about this deal and the structure of the company in general, you've been holding these shares, the company's been scaled down, it's divesting businesses. There's a lot of takeover interest, which presumably has been parked for the foreseeable future. Now you're getting a much bigger company instead. So are you getting a good deal from it in general? The terms seem to be quite good, given Anglo is the bigger company. It's not really paying a premium. You're getting this payout beforehand. Should Anglo shareholders be feeling fairly satisfied as things stand?
I think I have to come down on the fence on this one. I think it is actually quite an operational question. So I think there are big numbers. They're talking 800 million in cost savings a year. They're talking an additional 1.4 billion in EBITDA through this Collahuasi Quebrada Branca tie-up from 2030. Once its ramp-up is complete and they bring together some of the operations there. So there are, and just every additional copper ton, every additional profitable copper ton does make a difference to the bottom line. The margins at Teck are a bit lower than Anglo's. So just looking through the costs that they put out for Q2 or the first half, Collahuasi, which just had its own issues, has a net unit cost of $1.80 per pound. And that's up from $1.20 the year before. Meanwhile, QB, as it's called in the industry, so I don't have to say the Quebrada Branca
helpful
again and again.
Yep.
QB is a bit more expensive than that. So net cost is about $2.30 a pound, and we're talking many, many millions of pounds. We'd like to talk in tons a bit more, but there's that difference of 40 cents or 60 cents is pretty important to the margin. And what Anglo's job is now is to get that cost right down and get production up, and I'm sure the profitability level will rise. And where QB has had a lot of issues recently is the tailings system, and it's getting this right that has actually led to guidance being cut this year, and that cost figure going up. So that I make that point to tell Anglo shareholders or people who are interested in the company that I think this is a deal that'll really be defined by work that's done on the ground. And I think because, Anglo shareholders are giving up a lot for this. You're being diluted in order to take on, it's a lot more than incremental increase in copper production, but it's not like you're getting a whole other majors or a set of mines. And you said that this would be a harder fish to swallow. I think that's largely because of the promises they've made to Canada. So moving the headquarters, there's spending within Canada that they've committed to across mine development, exploration, even just professional development in the Canadian mining sector, all designed to get this sign off. And there was a lot of pushback initially to Glencore buying these Canadian mines, and they've committed to having Canadians in charge for, I think, 9 years. And I think that probably makes the point the other way, so that if a company like Glencore, which has had a lot of experience in Canada through assets, and also listed a subsidiary, Katanga Copper, there, which ended up going quite badly in a regulatory fashion, which I won't dive into too much here. But there is talk now of this also being a deal that could launch a new wave of consolidation. So, there's an analyst who put together a picture of what a Rio Tinto Glencore combination might look at as they lock up their copper assets, and that'd involve splitting off Glencore's coal assets. Rio Tinto sold off coal about half decade ago, or a bit longer, so it's resolutely out of that business. It could be a re-entry for BHP. They've got a huge operation in Canada with the Jansen fertilizer mine. So it could actually bring on a lot more interest, whether that's just, the desires of bankers who can see many, many deal fees in their future. I'm not sure. But one thing that this might be a bit too inside baseball, but the fact that they kept this quiet, they first started meeting in April, and then I hesitate to even say leaks, but like the news came out the night before this deal happened, earlier this week. So it's kudos to Anglo and Teck for keeping it under their hats.
A rarity nowadays.
Yeah.
Perhaps that just means we as an industry have been failing at our jobs, or certainly the M&A journalists, but we won't dwell on that either. Clearly they were locking it down pretty well. Anglo has had its own issues with, we're talking about mergers and divestments, things like that, with divesting its coal assets, its coking coal assets in Australia, insofar as Peabody, the buyer for those, is attempting to pull out, and it's going to arbitration now. I don't know if there's much more we can say about that at the moment, but it's still trying to get rid of De Beers as well. Those plans still going to carry on, clearly, with this merger too. So it has a lot on its plate now.
Yeah, and you imagine trying to do all this in the Vancouver time zone.
Well,
it'd be tough.
Even harder, yeah. I mean, it is true, isn't it, that mega mergers, they have been popular in the mining sector. They haven't tended to go that well in general. So there are plenty of question marks there. Equally, when you get a deal like this, it does lead to a lot more speculation about what might follow. And
there tend to be winners and losers. You look at Glencore Xstrata. Glencore just took what it wanted out of that business and did really well out of it. Became one of the principal miners in the world after its and trading is still a large part of the business, but it's a mining company now. I mean, there's always been talk about BHP and Rio tie-ups. I think the furthest it got was just over 10 years ago, and then it fell apart. Obviously BHP going for Anglo American last year when it was at its weakest, and the strange thing, well, not strange thing, it makes sense, but BHP was asking Anglo to do most of the stuff that it committed to doing to almost save itself anyway. So this restructuring program, while boosting its share price and also profitability, in many ways, it's still makes it a greater target because it casts off things that the buyers didn't like anyway. Obviously, they'd have to pay a higher price for that. But, I think this deal will take a long time to be done. And if the Canadians show any interest in BHP or Glencore, or I'll say Rio Tinto as well because I got no idea. But passing those thresholds, then we could see some more action. As a shareholder, I think I'd just be interested in the Teck assets. I think that's the starting point for this, and there's a bit of work to do there. I mean, things like there are things because it's a smaller scale company. Things like extending the life of a 100,000 ton a year copper mine is a big thing for a company like that. Whereas BHP and Rio Tinto are co-owners of Escondida, which is a 1 million ton a year copper mine, and a slight difference in grade of that mine impacts the global copper market. So they're playing in different circles, which is obviously why Teck has been a target here. But it's a whole different game now.